Welcome to Nasdaq Trade Talks. I'm Joe Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. And with stocks coming into the close on this Friday, April 3rd, the Nasdaq-100 is trading lower along with the major averages. But Brian Joyce, who's our managing director on Nasdaq's market intelligence desk, this index is trading relatively a little bit better than the other major averages.
Hi there, Jill. Yeah, it absolutely has. Through the end of the first quarter, the Nasdaq-100 was down 11% year to date, and if you look at the S&P, it was down 20%. Russell 2000 down over 31%. So, the drawdowns from high to low, the Nasdaq-100 is down about 30%. But because it had such a strong run up in the months of January and February, on a year to date basis, the metrics look much better. We have noted previously it has virtually zero exposure to financials, unlike the S&P 500. And even more so the Russell 2000. That's one reason why those indices are not performing as well. And its focus on the technology sector has actually helped it, as technology has been one of the relative outperformers.
Yeah, and let's take a look at our first chart of the day here. And that this is the Nasdaq-100, and you're looking at it from a little bit longer term of a basis. Based on the technicals only, take away the fundamentals and the current COVID-19 environment, what does it look like on the chart for you? Are you starting to see any bullish signs?
I think what we can see right now is, longer term, there's a lot of concern here. So let's just get that out of the way. Mm-hmm. We've declined 30% in this index. We bounced about 18% off the lows. And now I think what we're going to see going forward is just a lot of corrective, choppy price action. So over the last week, we've seen a bit of a pullback from that 18% rebound. And I would not be surprised to see if, where I have that lowercase b, if that low comes in a little bit more. So the retrace off the rebound, which was 18%, I think we could potentially see a deeper retrace, but then in the end, march up a little bit higher towards that 50%, 61.8% retracement level that is up around 8,250 and 8,600. I do think eventually that's where we're going to go, and then we'll have a broader potential retest of the lows. That's one way to look at it, and that's how I'm looking at it. But I think the big picture takeaway is that, we had a phenomenal move to the downside. We covered a lot of ground, and it's going to take some time to fix that technical damage. And so we're going to have a lot of corrective price action to the upside and downside.
All right, let's take a look at our next chart here. And going back to that concept of relative strength in the Nasdaq-100 outperforming because of the heavy exposure to technology and not so much energy and the financials.
Correct. And this chart really says a lot. And so this is a ratio of the S&P 500 technology index over the S&P 500. And as you can see this week, it's making virtually 20-year highs. It hasn't been at this level since late 2000. So almost 20-year highs for this relative strength index. So technology just continues to be a monster. This time on a relative basis, it's certainly down year to date like everything else, but it's vastly outperforming most other sectors, and particularly the broader S&P 500. If you want to look at another sector like this, the staple sector also is looking very nice and very attractive on a relative basis, but technology, the clear front runner here.
All right. Let's move along and take a look at Bitcoin Daily. We haven't taken a look at this in a while, and it's been quietly having a pretty decent run relative to what we're seeing in the equity space.
Yeah, so it bounced nicely off the lows, which came in. I can't even believe this. I didn't even realize it got this far down to 3,900. But we could see now it's stalling in that 6,400, 6,800 range. It's a pretty wide range, but that goes back to a gap level that we had identified back in 2019, which initially acted as support in December and early January. It then bounced higher from there up toward 10,000. But with this dramatic decline in the broader market here, particularly in March, Bitcoin here looks like it broke all the way down to below 4,000 and is now bouncing back above. So that prior support is now acting as resistance. if you can get through here, then hopefully it can continue to resume the uptrend. Hopefully for anyone that's long, but so it has some work to do here. We'll see how much longer it's going to take before we see an outcome on whether this can break out to the upside or if it's going to roll back over and resume the downtrend.
All right. Now, if we take a look at it on a weekly basis, a little bit of a longer term outlook, what are you seeing there?
Right. So this is what I think is favorable for Bitcoin is that it's still holding above its 200-week moving average. The 200-week is a long-term secular trend. The broader equity benchmarks, most of them, I should say, broke down below the 200-week. I think the Nasdaq-100 and Composite were the two main benchmarks that haven't. But for Bitcoin, we could see back in 2015, that marked the end of a roughly 84% decline from its prior year's highs. It rode the 200-week for the better part of all of 2015 before then resuming a phenomenal uptrend. And then in late 2018, early 2019, something very similar happened where Bitcoin declined roughly 85% over roughly 13-month time period, similar to 2015, and then found support at the 200-week. So most recently, we did see that 200-week be violated on an intra-week basis, but on a closing basis, it hasn't seen more than one weekly close below the 200 weeks, and it's bouncing back above it these last 3 weeks. So until we see a 1 or 2 consecutive weeks below that long-term moving average, I still I think it's hard to dismiss the bullish case here because that 200-week has been so reliable for so long. And if this time is different and it changes, we'll know in a fair amount of time, and then we can reassess our outlook. But for the most part, I would say this still looks very constructive.
All right, Brian. Thanks so much for everything this week. Have a great weekend, and we'll talk to you soon.
All right. Thank you, guys.
All right. And thanks for joining me on Trade Talks. I'm Joe Malandrino, Global Markets Reporter at Nasdaq.